Hello, everyone. Hope everyone had a fantastic trading day. How's everyone doing? Good afternoon, Patrick. Hey, Daniel. Good afternoon, Jacob. Good evening, Anissa. Thank you for being here. Thank you for the people. Thanks for all the thumbs up so far. All right, what do we got going on? Interesting day today. It was very short squeezy today. Creating a couple potential topping patterns. They're just minor ones, but it is something to take note of at this point. So, we had a lot of Fed speak today. I thought it was leaning on the hawkish side. Definitely the hawkish side, but if you look at the Fed Watch tool, it's 20% for a hike, 80% for a pause. And if we look at the probabilities, it's still clearly pause and then cut November, cut December. So not much overall changed there. We do have Logan speaking tomorrow, and that's about it that's on this list. I'll have to see if there's anything else. We have Redbook at 7:55. After the open, we have S&P Global Composite and Services and Manufacturing 15 minutes after the open. All expected to still be in expansion territory. Remember, expansion is 50 and above, contraction is below 50. Then we have Richmond Fed Services Index. Last time was really bad, expected to be a little worse. And the manufacturing index expected to be a little worse than last time also. That's at 9 a.m., but that's a very minor regional index. And then pretty much nothing. Really nothing even before the cash close. After the cash close, you got some building permits information. So overall, once you get Logan and some of this S&P Composite Services, which again aren't the major numbers, but if there were big beats or misses, it could have minor movement. Today, your comm services led by AI, everything is still pushing higher. Pfizer running in healthcare. Your mega caps mixed, except Tesla up strongly today. Still bouncing back. Consumer defensive. Big rotation out of consumer defensive. So you come down here, you see big rotation out of consumer defensive and into comm services and into short squeezy stocks, which was today made the rally very suspect. Fear and greed mode solidly in the upper end of greed, closing in on extreme greed again. So that's where we sit. S&P 500 ratio still up 24.27. Zoom was up. I didn't see the exact earnings results, but it was a pretty decent gap up to the daily 200 after the close. Tomorrow morning we have Lowe's. Remember, Home Depot did not produce very good earnings results, but it didn't punish the stock that much. We're going to have to see what happens with Lowe's tomorrow, and the other one, key one I'm watching, is AutoZone. Those are the two ones I will be paying attention to. And then third is Williams-Sonoma for the higher-end consumer. Tomorrow after the close, we got Palo Alto and Intuit are two of the big ones. You got Toll Brothers, Allegiant Technologies. That's about all the big ones coming up there. Bullard says we may hike 2 more times bulls, but his name is Bull. That's pretty much summed it up. Yeah. I mean, I think they, again, could pause and then have to resume hikes. Jamie Dimon, I think it was Jamie Dimon, said he expects more hikes this year. So even if they pause, inflation expectations from CEOs, they're expecting 5% inflation. Okay? 5% inflation this year, still running hot from CEOs. So, I mean, yeah, if the CEOs were expecting 2%, that'd be very different. Very different than 5%. And once you get things somewhat entrenched, you can keep passing along until the consumer peters out. But we shall see. Hey, George. Hello, Options 22. Options, I did get your text messages. Is it possible to trade without using any indicator? Yes, it is. It's completely possible. And I mean, volume's not technically an indicator because it's related to price action. These levels that you see, the harmonics, you can calculate them by hand. And if you don't want to do that, you could just use pure price action with using clear path moves for targets and breakout breakdown zones. You don't need any of this. This is just, if you made me strip everything off my charts except for just pure price action, it would still work fine. There's a lot of stuff that I like for secondary information, but it's not required. Also very suspect, low volume day. This volume, wow, has been still abysmal. Still abysmal. So, and even in the NASDAQ, look at this. Even little Friday topping, sort of toppy area was much more volume. You only had the day last Thursday. And Friday's volume was still higher than 1, 2, 3, 4. 4 out of 5 bull days, 1 bear day was higher. So, still don't have the volume supporting all the price action yet. Just something to keep in mind. Thoughts on continuing ARC short with today's close or waiting for the 62.5? We can take a look at ARC. Hold on one second. So what's on the radar screen now? Well, we're still closing above the key support level. You remember the gap open last night was below it, but it's held up above. We're above 4,200 still. Now, we did get, don't worry about this little back and forth. It technically doesn't invalidate this was a news-driven event, which, you know, that stuff going on Twitter with a fire near the Pentagon that was refuted within minutes. This is still a decent thing. I need a 4-hour close below 41.8650 to trigger. And that could be a pullback as far as 41.5125. The key levels 41.69, 41.60, and 41.51. Now, that would take us back to the other side of the daily rotation zone and the lower sort of support shelf. So, would that do a lot of technical damage? No. It would start cycles rolling over. If that happened with a lot of momentum and horribly weak internals, let's say, again, debt ceiling talks fall apart, blah, 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 and we get more momentum, it could be rolled forward, but the next key target I would utilize is the bottom of this support zone right here, right around 41.25 area with the rising 50. So, the NASDAQ also has one. There you go. Needs a 4-hour close below 13,794.25, 13,718, 13,680, 13,641. What does that look like in the daily? That just takes the NASDAQ back to the second target is right at the top of the rotation zone. So that would just take it back into the dip of the rotation zone. So is it even getting below any key support levels? No. Remember, daily cycles at the top and very, very overbought on the NASDAQ. The Dow, there's no such pattern on that intraday, and the Dow's just sloppy. I'm still following the bigger, already triggered double top. Other than that, price action today didn't change anything. Russell, strong move up today in the Russell. Was waiting to see if it was closed above Friday's high, which would be an outside key reversal. It looks like it's going to close within that, so it's still an outside bar. And yes, this does qualify for a potential double top, with the key targets being 1751.8 and 1743. Those technically aren't right. I had to flip to the other side. Sorry. The key targets being 751.3 and 1742.3. VIX up slightly, but not anything above this 1830 area, so nothing really notable there. One-day VIX still at the lower end of its range, although slightly up. The DAX, little one-day pausing bar with cycles at the top, so it starts breaking below 16,235. I'll watch for the return to the rotation zone. Notes, not much going on there, although we do have a little mini potential double bottom. That would need a close above 113.30 with the targets of 114.07, 114.12, 114.17. 10-2s, which based off the futures was a gap up and a quick retrace back down. Dollar index, come on, still was an upward close. Cycles rolling over, so still we have a sideways correction. If we pull back now, the rotation zone is rising 102.40 to about 102.25 is the first area I'll be watching for the pullback, followed by about 102.08. Crude, still caught in consolidation, not much to talk about there. Gold, still could not get back above the 50, watching for the next rollover play here. Watching for the next rollover, but we really got to break below this 1960 support area. Is there a pattern here? No, not really. This is not a great bottoming pattern just yet. Silver, inside data Friday, but still watching for this more downside pressure with the double top triggered. Copper breaking down. Pretty weak close, but still holding the bottom of the channel and still holding the diamond pattern. Watching for the bottom to break still. Especially cycles are at the top back on the daily, so I'm watching for another push lower in copper. US dollar, Japanese yen. This is a beautiful, beautiful pattern, and it there's no guarantee that it'll work, but I do like this if you're trying to learn a price action pattern. Doesn't matter the time frame, but this is, so you had resistance all the way here to the left. Resistance, resistance. We broke out last week. We paused and retested the resistance area both on Friday and today, and are rotating back up, you see, into the 4-hour rotation zone. Why I like this is also because you have a really nice potential invalidation point. So you have a little mini double top. This gets a 4-hour close back below 137.42. Well, that would invalidate this pattern, so we'd start watching for the bigger pullback. Until that happens, a breakout can be traded from my perspective. Again, not trading advice, but you have a key stop level on a closing 4-hour basis. So really nice pattern to, again, harking back to the question from Henry, is it possible to trade without using any indicator? Yeah, we have resistance becoming support. You don't even need any of the other indicators. There you go. Here's resistance becoming support. And then you have the potential double top pattern. As long as that doesn't trigger, it favors the breakout. Continued push higher. Pure price action right there. We will look at those, Balaji. In video reports after hours on Wednesday, what? What would be a... Richard, what's in video reports after hours on Wednesday? I'm not understanding that. What would be a level that would be a technical damage for double tops? Well, I showed you the double tops and how they play out. What really needs to start happening to get to major technical damage? We need to start breaking below about 40.77 in the S&P. Okay. What else? Hold on. What else? Let me address something. So back to your question, options 22 on IXIC. We did get on the daily, the close below 62.5. The probabilities are still in play. Just with this, it's around a 70%. It would have gone up more did we get the weekly, which is why I was talking about the weekly this morning. You see, we never got the weekly close. The probabilities would have gone up more. What would invalidate it is, as I went over today on the daily. So you still have decent probabilities, and based off long-term stuff I follow, I'm still looking with mid-80s for the percent for the October lows to be taken out. But it can be a very long, painful process, especially in the insane market. Now, if we get a daily close above this 13,915.95, then the probabilities shift and it will flip. And the probabilities will drastically drop just based off the 62.5, not necessarily the long-term system. All right. Then I wanted to address that from options 22. Euro US dollar, by the way, still has the massive double top in play. We're a long way off from there just based off today's price action. Not much going on. Pound, not much going on. Bitcoin, not much going on. So there's no point in harping on those. Tesla, big strong breakout from the flagging pattern. I did not see, any strong news on Tesla besides the major options play getting very overbought. Cycles at a top. In order to invalidate this, it still needs a close above this 197.50. Other than that, it's still in play. Now, ARK, the short is still in play. Hold on, let me double check because I did not lower the stop level. The stop level is still in play, 41.45. But you see, again, ARK holding a lot of the most squeezed stuff today. Big break up in ARK. We've already hit the first target area, so the pattern is officially over on that close above that, or a trade through 42.78. So that's what we have still going on there. In terms of Zoom actually backed down. If you want the after hours data, let's just see. And I did not have a chance to dive into the earnings yet. But you see, this was above 78 at one point, back down at 72.66. Earnings, again, these are their adjusted earnings. So they 116 versus 99.1. Reported revenue, a slight beat. But wow. Because they're already, that's not a ton of growth numbers. Yes, it's growing. From the last one, it was 122 reported. This one is 116. And so that EPS did not grow. Revenue last time was 111.8. This is 110. So revenue didn't grow. Yes, it beat, but you didn't have earnings growth or revenue growth, and it's trading 213 P/E. With no revenue or EPS growth. There is no reason. That's the problem. It was actually down earnings. People just look at the beat. You got to compare it, because especially stuff priced into major earnings growth to support this price, that is flat to down earnings growth. I'm not paying 213 P/E on something that's even got flat earnings, let alone slightly down. So I'm not surprised it's backfilling after you got the bunch of the buyers that say, oh, it's a beat, let's just buy it. And it's again, shorted stock for a reason. Because it doesn't warrant this price it's trading at. But that's the nature of this market. Biora, again, that was a pretty strong update today. I know nothing about this company. No P to E. Very negative EPS. There's a reason it trades down here. I have to bet this was some kind of squeezy play, but on any move higher, you're looking at the areas from your highs, the last big squeezy play, and then you collapse it back down. So could it follow through more? Yeah, but I'd be watching for these highs, 7 to about 750. If the squeezy play continues, I would not be greedy on this. I mean, yeah, they beat, but this squeezy isn't due to, I mean, this is horrible. 2K in revenue? Come on. This is just a squeeze play. So if it does pop higher, 7 to 750, but then I have nothing to do with this company. That's based off pure technicals where a target would be, and then I'd be watching for a rollover play, and that's if it does continue. If it does not continue, I'd be watching for it to be trading back down unless there was some major news on here. That's from 6 days. See, there was not even major news. So this was slowly a squeeze play for my book unless you let me know there's some kind of news. No, it's not time to invest in Mama Kathy. That will roll over again. As I showed you, I mean, she's the kind of Zoom player. Look, a lot of these companies, oh, well, they're not doing that bad. They're still beating. They're beat down earnings expectations, and they're not growing at the PEs. And there's no big transformation. Dix and BJ, I hope you didn't put those into together for a reason, because that's sort of funny. Again, those report tomorrow. Or what is BJ's tomorrow, or is that Friday? Yeah, it is tomorrow. Dix has a triggered weekly double top. So on any rally, I'd be watching for a rollover play. And by the way, going into earnings, based off where it finished today, I'd be ratcheting down a stock. A stop. It's coming right down to the first key area, which is, so you see trigger, little bounce back to rotation zone, and then the rollover play here. And it's coming in against the 200 going into earnings. So that would definitely warrant a lowering of the stop from my perspective. If they miss 119.79, 115.29. I also want to see from this last run up where the key levels are. So if you got down here and actually closed below 62.5, you could continue a rollover play. But this first key area we bounced off today is the 50% from the lows in November of 22. So November of last year to the highs in March. This is a very key support level. Then we want B. You have a little mini double bottom. I got to take a look at that because it's okay. Oh, let me get off the after hours. There, you remember, don't use after hours day yet. Still this point right in here. Yep. Would need a close above 71.71, but you're going against the rotation zone, and your first target is the 200. So this would be a very, 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 very aggressive, lower probability play to the upside. Other than that, you've also yesterday or Friday and today finally closed it below the 62.5. So the key target areas on any miss, 66.79 to 65.06, and I'd be focused on that 66.79 area because you see that resistance right in here becoming support, and then that support right there. Just a couple more. NVIDIA. Nothing's really changed today. Didn't do anything from the daily perspective, so we got to check the 4-hour perspective. And it did not form a double top. That's the only thing. And if it runs up tomorrow and gets above 315.41, it would be a potential double top. That's the only short-term thing. Again, catching on that 4-hour rotation zone, rotating back up. Based on the daily, you have cycles at the top. You're starting to possibly get some divergences, but your key level, if this double does not manifest, your key level is the low from Thursday. You have a gap and a gap left below that. So you start closing or moving with momentum below Thursday, you have a double potential gap fill, which would take it back to a key support area right around 292. Palantir, which ran after its earnings, it's still trading above a key support area reinforced by today, but you start breaking below this 1145 area, we could see a potential pretty key retracement. You have a gap left behind and the prior resistance becoming support. So I'd be careful if it starts breaking below 1145 because you could easily see a quick backfill to 1025 if we get a sustaining market rollover. Other than that, if you're looking for the next key levels, if it does continue higher in the insane market we are in, 1305 also lining up with this topping area right here back over a year ago from April 22, and then 1369, and you have a gap left right on the other side of that. Do we have any shorter term higher probability topping pattern? I don't think that's traded high enough yet, and no, it hasn't. So I'd watch for a potential double, but it's not traded high enough. In terms of the spiders, you have a potential double top. There you go. A close, at least a 4-hour close. I think, let's check the 1 hour. I'd use a 4-hour close, or it'd have to break with a lot of momentum below 417.35. Then you have 415.80, 415.07, 414.31. What's the difference between forward PE and trailing PE? Trailing PE is based off of what was actually reported. Okay? Forward PE is based off of forward guidance. So if you take static price at one point, if you have a higher PE ratio going forward, or a lower PE ratio going forward, it's telling you something based off what the expected earnings are compared to the prior actually reported earnings. All right, trailing PE are based off of what's actually been reported. And why is that somewhat more important? Because if earnings aren't expanding, if earnings are contracting, then and they're still elevated from prior PEs and they're contracting, then the market can be really fundamentally overvalued. If earnings are expanded rapidly, then that same overvalued condition isn't as overvalued because you're actually growing earnings, so your multiples are going to come down over time. Is Palo Alto? I haven't looked. That's funny. Oh boy. Palo, thanks for putting that in there, bro. 2,400. Yeah. Okay. Nothing left to say right there. So prior was 105 reported. What's estimated? 93. So you're going to tell, let's even say they beat and report 105 again. That would be flat earnings. Revenue 1.655 billion. 1.71. So they could even slightly beat in revenue. But am I going to friggin' pay? Would even be a massive beat. Am I going to pay 2,400 or close to 2,500 times earnings? I wouldn't trade that with Coco's money. Hey, Brendan, not Brandon. Brendan. Misread that. Any thoughts on this? This is not one I normally look at. -3 earnings per share. No, of course, no PE then. It's been massacred because it was very overvalued. Missed on earnings. That's pretty bad. Any thoughts? Yeah. I would not want to be long it. From a technical play, you actually have a potential double top that could take it back to down back to a 159. It need a 4-hour close below 202. And that could potentially take it back down to 159. 180, 169, 159 are the key target areas. That would easily take it also back to the 200. This is your daily chart. And reverse this little move. So, especially if that triggered, would not want to be long it. I wouldn't want to be long it anyways because it already poked up between the 50 and the 62.5 multiple times and is trying to roll over. Yuck. So there you go, Brendan. I mean, if I were long this, I know where a key stop would be. And if I was looking, by the way, for anybody tuning in who's trying to hope it's going to get back up into this level and you're still holding, you're holding out for a miracle. You're welcome, Chris. Appreciate you looking at it as a huge potential funding catalyst coming in the form of DOE loan. Any targets for a short squeeze? You're really hoping for a short squeeze, but any targets would be... I'll tell you your target area. If you're hoping for a short squeeze, it would be up to 320 area. 307 to 320. Beyond there, if you did want to try, again, can't stand this. 358, 387 are your next key levels. There's your upside in case you are counting on some kind of short squeeze. Those are the upside targets that I would utilize. But they still put that in context. If you're hoping for something to take it back into the 20s, or you're hoping for that 99-1 long shot, even on a short squeeze, you're hoping for major stuff. Would I? If a forward PE, assuming flat price, the earnings would go up. So that would take, the PE ratio down. Correct. You're welcome, Anissa. It didn't hurt. It's just I don't like to play this kind of crap because and I don't like to count on things like short squeezes unless it's an actual company that has, there's things I'll look at that are shorted, but they actually make money, and not counting on some kind of manufactured short squeeze. This thing does not make money. That's why I do not like it. There are things that get heavily shorted and at times get out of balance. And those are ones I would look at, but this isn't one of them. All right, with that, let me just peek back at the old Zoom. Nearly back to the close. I don't see how people are holding this even at this level. I would be shocked if this does not get a rollover play. But the market can continue to shock me. Well, thanks for tuning into the channel, Brendan. All right, with that, I'm going to wrap it up for now. Take the 5 dogs out for a walk. And I shall see everybody tomorrow. Thanks for tuning in. Bye for now.